Hello guys, and welcome back to the channel for a new Palantir video. So Palantir is reporting earnings on the 9th of May. I wanted to see what can we expect. Is the price going to skyrocket or is it going to crash? And we're here to find this out in this video, and I want to give you my outlook and a fantastic valuation that you can use, that you will be able to download on our Patreon. The link will be in the description when it's ready, hopefully within a few days. And if you like this video, please make sure that you subscribe. So what will happen with Palantir when it reports earnings? What is our outlook? And to be honest, there's not much hope for the stock price. So we can take a look at some companies that reported fantastic earnings. And Tesla is down 10% since it recorded best earnings ever, okay? But maybe this is just an outlier. Let's look at Apple. Apple also recorded an A+ quarter, and they were down 3.66% the next day. So these are the companies that reported good earnings. Now let's look at some companies that missed earnings. Let's see what happened to Netflix. Oh my god, this is just a completely vicious market. However, I still think that us Palantirians can make a lot of money on this by lowering our cost basis and, just enjoying this fantastic discount if you are a long-term shareholder. So what do I think are the pros that happened to Palantir this quarter? Because I do believe that it's going to be an outstanding quarter for Palantir. I wanted to see what does the street think about this upcoming quarter, right? So I Googled around on the internet, and the articles I found is brace for impact. Palantir is going to be down, and this is probably true regardless of how they report. Okay, so let's just mentally prepare ourselves that it's going to be a crazy red day after they report, even though it's going to be blowout earnings, I believe. The company is most likely to post muted results for its government segment. How? This is, I believe, the biggest BS ever. I believe that because of the Russia-Ukraine situation, they're going to have accelerated government contracts, and they will have accelerated European government contracts, which has been a soft spot for them. Plus, they have hired a lot of salespeople, which they have never had before. I believe they're up to 150 salespeople now, and you should start to see a result of that because these government contracts take a long time to close, as Alex Karp has said, and they hired most of these salespeople in 2021 already, so some of the early hires should start to pay off. And so let's not read more into this Wall Street nonsense. Let's look at what is my predictions, which also might be nonsense, but anyways, I thought I'd share them with you. So I think that their government business should significantly improve, or if it takes time because the contracts are so long, then they should indicate a lot of incoming contracts because of the Russia-Ukraine situation. Again, as I mentioned already, the salespeople that they have hired, I believe they're around 150, maybe over 200 now from zero a few years ago. Should start creating a result. They have been announcing full of new partnerships. If you follow PalantirDaily.com, which is a fantastic blog by Amit, I'm sure I butcher his name. They basically have a partnership with every cloud provider, and they have a partnerships with IT companies, consulting companies. So this should result in a lot of new sales. And then probably they're sandbagging their guidance, because I was reading through their earlier investor presentation. So on the quarterly, I have seen that they have been guiding for over 30% growth, but in Q1, they grew 49% in revenue. In Q2, they grew again 49%, and then 36%, 34%, and then 37%. So as you can see, they're consistently over the 30%. And I found that they were guiding on the free cash flow, and they had to increase it with almost double in Q2, I believe. So I believe that they're sandbagging. So what is bad for their earnings? Well, we are in a bear market, the inflation fears, and Palantir is a fantastic inflation-proof company. They have basically no loans on their balance sheet. They have a large cash balance. Their customers are governments, which always have money regardless of the inflation, as long as there is a need. Mr. Putin is taking care of the need part. I hate that situation, but yeah, somehow it's lucky for Palantir. The Fed raising interest rates, again, doesn't affect Palantir because they don't have, it does affect because the valuation has to come down, just like any other growth companies. And then the last thing that negatively affects Palantir is you and me, because basically Palantir is only 30% owned by institutions, meaning 70% of Palantir is retail owned, and that makes the stuff very volatile and very sensitive to short-term fears on the market. But if you just go through this list again, all the pros have to do with the company and all the cons have nothing to do with the company. So it's a very interesting situation where the company is doing better and better and better. The macro around the company is becoming worse and worse. So, and now we arrive to, should you invest in Palantir after the earnings or before the earnings? And this is not financial advice. I just want to tell you, share my thoughts with you and my predictions and why I'm predicting it the way I'm predicting it. And I might be completely wrong. And this Excel is going to be available on our Patreon, which will be like $5 a month. And you can just, join. So basically, this is a valuation that I made for Palantir, on which I have a few assumptions. And this is a very safe valuation. As you see, I put here 2021 from their investment reports. And again, here is where it gets controversial, is because I do consider that they have operating income. The only reason why this is not shown in the bookkeeping is because of their stock-based compensation. And this will normalize, and until it normalizes, I believe this creates a fantastic buying opportunity for the investors who understand this. You can disagree on this point. I'm completely fine with that. And as you can see, I basically said that their revenue is going to grow by 30% per year, every year. I'm very sure that they can keep this up till 2025. And then, we need to reevaluate if the growth is going to slow a bit less or more. We're going to look at that. So now their operating margin, I'm actually calculating with 25%. And the reason for this is because I do believe they will have some stock-based compensation in the future. It's not going to go away completely. And I do believe that having all these salespeople should bring their margin down a little bit. If it doesn't, we're going to see in the Q1 report. It's amazing. It's just a bullish sign. But I want to show you how safe this number is, because so far every quarter they have been reporting 34, 31, 30, 29. This is my prediction, right? But basically around 30% margin. And I'm like, okay, let's make this calculation super safe. I count with 25%. I keep thinking with stock dilution, with stock-based compensation. And this is the level that, I think Apple does per year, or, a company like Tesla. So I just heard that this is a normal number on the street. So I did think with this. And then the biggest question is, what is going to be, because we basically get the earnings of the company every year. And then if you know what the PE should be in 2025, then you can count the market cap, and then we know how many shares there are, and then you can get a stock price. So based on this calculation, I'm thinking with that Palantir is going to command a 57 PE. Currently, they're trading at 52 PE if you count the PE on their free cash flow, right? And the reason why I think, you might think that this is high. Amazon used to trade, not now, we're in a bear market, but Amazon used to trade around 90. I mean, Tesla is like, 180 PE. And basically, if a company is in growth phase, they command a higher PE. A good safe assumption for me is, as long as the PE is not more than 2 times the growth, so meaning if they're growing 30%, I'm okay with a PE up to 60, depending on how the Fed is in 2025. Let's say that recession comes now in 2022, 2023, and the Fed is going to go back to dovish and, lowering the interest rates, then again, the P's will go higher. I do believe that this is a very safe assumption. I just want to show you that the market cap gets hugely affected. If I put a P of 30, then the market cap gets cut in half, right? So the P is a very big assumption. Again, if we put 100, which is like Snowflake, okay, don't quote me on this, but there's other companies that are already at a much higher P, and that way the stock price in 2025 should be $51, but let's keep the PE to 57. So I believe at that time the stock price will be $27. And here is something very nice that I did, which is, what is a return that you prefer? So if you prefer 30% per year, again, this is a very safe calculation, I believe. If you want 30% return from the beginning of this year, so we're already almost half gone on this year, then you should buy Palantir for $10. Again, this is where you need to make your own decision. If you're happy with 20%, then you're okay with the stock being $14, and this is like a very moderate calculation. So obviously there's risk in this, but also there's an upside on this. If the PE is higher, if they're accelerating growth and growing much faster, then it could be very much undercounted. So basically what I'm doing, and here is my predictions for this Q1. I believe that they're going to grow their revenue is going to be 470 million. And if you take what management says and then they grow 30%, and you take 30% of this number, then you come to 430 million. And I believe that the 430 million, it would be a decline quarter over quarter, and I just can't see it with the amount of partnerships that they have been announcing and the Russia-Ukraine situation. So I'm giving my guess to 470. That would be a 37% year over year growth. And again, want to point out it's way higher than my valuation calculation. And quarter over quarter, that would be an 8% growth. I'm saying that their operation margin will be 28%, the adjusted operating margin. Very interested to see what will happen to that. That would make an operating income of 130 million. So what is my plan and what would make me sell Palantir? Obviously, if they would have a major change in their business and they would guide for very slow growth, and the government's canceling the contracts, and the commercial sector not growing, I would completely reevaluate my thesis. I don't get scared from the stock-based compensation. I do believe that this quarter it will still be a very high number. However, I'm very interested to see what they are going to guide on it and how they say it's going to normalize. And I'm also very interested to hear if their government section is going to re-accelerate because of the Russia-Ukraine situation, and how their business is in Europe, because they have had a hard time expanding in Europe. But I believe that they will come through on all these and we will have a fantastic quarter. And as far as the buying more shares, I am trying to arrange about $30,000 more to be sent to the stock market. I'm potentially arranging to have also margin on my account. And if the stock price goes below $10, I will definitely be buying. And if the stock price goes to below $9, I think I will be buying on margin. But it's very important to understand that the margin is basically going to be replacing money that I would anyway send to the stock market that is a bit late. And that's why I would do it. So it's not like I'm going crazy on margin. It's more like I'm having money that I know is coming and it's a bit late, and just to bridge that time that it's late, I would use the margin to buy more stocks. Let me know what your thought is on Palantir, if you're going to be buying more, what you're looking for in the earnings. Thank you for watching this video. Please make sure that you're subscribed, and I will see you in the next one. Ciao, ciao.